ONON Holding is one of my favorite stocks right now. It's one of the companies in the asymmetric portfolio. Phenomenal growth rate. I think the company is really hitting its stride ahead of the Olympics. So we'll see if they have some runners that bring even more exposure to the ON brand. And what's really interesting about ON is it's not only about performance, it's about the products that it's selling into the market. This isn't just any sports product, it's a premium sports product. So it's the kind of product that you're going to see at a suburban soccer game with parents just wearing ON shoes and apparel. But the big potential for ON is not just being on more people's feet, it's being on people's bodies. Apparel is something that I've actually seen pop up more and more recently, and it's really impressive products. Very, very high quality, also a very, very high price point. If you're familiar with ON and their shoes, no surprise that their price points for clothing is going to be equally as high. So I want to dig into exactly what the opportunity looks like, because I think this is one of those untapped markets for ON. As we start to see more people wearing their shoes, more stores are putting more of their apparel on shelves, you're going to see more shelf space being devoted to ON at companies like Dick's Sporting Goods. That's where I saw some of their products, and other retailers around the world. So I think this is a really exciting opportunity. So I want to put it into a little bit of context today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So let's look at just how much apparel impacts ON's financials, at least right now. This is a look at ON's first quarter report, and you can see that revenue grew 29.2% on a constant currency basis. Since they report in Swiss francs, it's always important to look at the constant currency basis numbers. But let's go down here to apparel and where they break things out a little bit more. This is net sales by product category. Shoes, 484.7 million Swiss francs out of 508.2 million Swiss francs of revenue. Apparel, just 19.7 million Swiss francs. That means that apparel was 3.9% of revenue in the first quarter. Just a tiny, tiny percentage when you consider the fact that people are going to be spending more money on apparel than they are on shoes typically. And let's look at what that apparel looks like. I'm going to start here with sweatshirts, because this is one of the things that I saw in the store. Just really, really high quality. But you look at the price point, $130 for a pretty standard looking hoodie. But again, this is the market that ON is going after. A very, very affluent market. Consumers that are looking for a little bit of differentiation in their athleisure products. And so ON is going to charge for the brand that it is built. This is a very, very premium brand. You're not going to see them discounting these products in stores. So $130 for a sweatshirt, a zip-up hoodie, $170. I'm going to stick with men's products here, but you can see that a performance tee, $80, $60 for just a lightweight standard tee. Just really, really crazy high price points, but you're getting that high quality product. You're getting that high quality brand. You're getting this innovative branding. Zendaya was a recent signing for ON. Now you're going to see more and more of their products in the Olympics. So that's going to be a big activation. So this is the kind of product that has a lot of growth potential for ON Holding. And when you take a step back and look at ON's results, the momentum behind the brand is just tremendous since the June 2021 quarter. These are all trailing 12-month numbers. Revenue has grown at a compound annual growth rate of 56%. Net income is up 160% in a compound annual growth rate. That's a little bit misleading, but the fact that ON is growing that quickly and it's generating net income is extremely impressive. Typically what happens with product companies like this is you spend a lot of money growing your R&D, your sales and marketing, and that grows at a faster rate than your actual gross margin or operating margin does. So you're typically losing money as you're growing and scaling the business. ON has such high margins that they're not doing that. They're actually making a net profit. You can see those margin numbers here, $1.24 billion in gross profit on $2.1 billion in revenue over the past year. Management is targeting a 60% gross margin long term, and they're targeting doubling the size of the business over the next 3 years. So you look at those goals that the company has and the momentum that it has just in shoes, that is a really solid business right there. But then add in the apparel business that is basically nothing for ON right now. And this is where it has tremendous growth potential. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. The challenge is, what do you pay for a stock like this? And this is always the challenge for a growth company like this. So I'm going to give some numbers from FinChat. Price to earnings multiple on a trailing 12-month basis is 88. On a next 12-month basis, so based on analyst estimates for the next 12 months, the PE ratio falls down to 43. So pretty high multiple for a forward PE multiple. But again, this is not a company that's optimized for earnings yet. So that's going to elevate that multiple a little bit. If they weren't growing quite as quickly, it's likely they would have more of their money flowing to the bottom line. If you look at price to sales, that's when you get to a little bit more compelling numbers. Price to sales right now, 5.8 on a trailing 12-month basis and 4.4 on a forward basis. Where do competitors trade? Nike is currently trading for an enterprise value to sales of 2.9. So given the growth rate that On has in the business, I don't think this is a crazy multiple to pay, especially when you consider the momentum that it has in the shoes business and the fact that it's just starting to unlock the apparel business. I think this is really going to be the growth driver over the next few years. Seeing their products up close and in person, I was incredibly impressed with the quality. I would say that this is probably even a step higher than something like Lululemon. So that's why you're going to see that same price point. Maybe you have a little bit smaller addressable market just because you are going to be going after that higher price point. People aren't going to be as willing to pay $60, $80 for a t-shirt as they are to pay $140, $160 for a pair of shoes. But again, you're trying to build this premium brand around On, and it's still a relatively small business. There's a lot of growth in areas like Asia. And so we'll see if there's momentum coming out of the Olympics for On. We'll get results about a month from now from the second quarter. And then the third quarter would actually include the Olympics and any impact from the marketing there. I know that they're planning a lot of activations. They've been very active on social media with all of their athletes that have been qualifying for the Olympics. So we know that they're going to be highlighted in a number of different places. So there's a lot of potential for growth. On also has a really good balance sheet with $646 million worth of cash on the balance sheet. No debt. There are some operating leases associated with the stores that they've built, but it doesn't sound like that's something that they're going to be expanding all that much or all that quickly. So putting most of that money to work with working capital, which you have to do to make the shoes and apparel that ultimately ends up in stores and sells for this very, very high margin. So I think the trends are really solid for On. Everything that we're seeing from the business seems to be going according to plan. Reasonable price for the stock, but the real upside is going to be this really, really untapped apparel market. So if you're an investor, you're interested in On, I encourage you to find a store where they actually have some apparel. You can go see it for yourself, because that's really the best kind of research, is seeing it for yourself. But I was really impressed with the quality. So I think this is going to be one of those big potential growth markets for On, in a way that they could actually outperform their own expectations and guidance over the next couple of years. But what do you think about On? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.